Hey everyone, welcome back to XXCRYPTO. In this video, we're going to be talking about a very important subject and one of my favorite subjects actually in trading, which is trading psychology. Did you know that you could have the most perfect strategy in the world that has a 90 to 95% hit rate, but still lose money? That all depends on your mindset and on your psychology. Have you ever been in a trade where you're up, where you're in profits, but then you end up losing all of your money? That's psychology. That is probably the most important thing or the most important concept to be aware of if you're entering the arena of trading, especially crypto trading, because it can be very volatile, as you guys might know. So in this video, we're going to break down some concepts about trading psychology, and I will show you, or I will teach you, how to improve your psychology, or how to be aware of the many mistakes or pitfalls that you might have while trading, and how to avoid them, and some key, I guess my number one tips in order to not make those mistakes, or how to improve your psychology, in other words. So first, I'm going to go over some of the mental roadblocks that come when it comes to trading. Number one is the fear of losing. So let's say you're up a huge amount on a particular trade and you don't want to lose this particular trade, even though it's really going in your direction. Like, let's look at the chart above. Let's say you entered Bitcoin right here at this green candle, and you're riding this trade. You know, it's in an uptrend, as you can see, and for some reason you decide to exit the trade early instead of just following the trend. So we see a pattern of higher highs and higher lows, and yet you might exit the trade early instead of riding it all the way to the top here. That's one example of a mistake you might make, because you're afraid of losing instead of being excited about winning and staying in the trade. So that's one thing to be aware of. And don't be afraid of losing. Losing is part of the game, and it's just it's just part of trading. So you have to get used to losing and put on more of a winning mindset. And we're going to go over this on a much deeper level in future videos. For now, I just want you guys to be aware of this particular roadblock, the fear of losing. Don't be afraid to lose. Be afraid of not winning, really. Number two is, and this has actually affected me in my early trading career, and even to this day, it still affects me. It's analysis paralysis. So what is analysis paralysis? It's, you can kind of figure it out by the phrase itself. So you're doing so much analysis that you become paralyzed by all this different analysis that you might be doing. So for example, you might have a bunch of different indicators on your screen. So this screen behind me doesn't have too many indicators, but this itself might paralyze you, because it has candlesticks. It has all these different lines. Like, what do these lines mean? And then if you look down, there's more lines. That's the MACD indicator. What is the MACD? We'll go over that in other modules. That's a complicated subject. But yeah, try not to be paralyzed by all this different analysis that you're doing, especially if you're an analytical person like I am. So, looking at the chart behind me, you could be looking at all these candlesticks, looking at all these lines, looking at all these indicators, and then you might be looking at the news. You might be looking at, well, what is your favorite, YouTuber saying about the market right now? What is Fox News saying about the market? What is, CNN Business talking about regarding the markets? What is BBC News saying about the financial markets? So all these different factors will lead you to essentially paralysis, where you just cannot make a decision about a particular trade. So this is actually a very common mental roadblock for me in my early trading days. So I would literally have like 5 to 6 different indicators on my screen, and each indicator, kind of just was fighting each other. And then I was like, I was looking at the opinion of my friend, or I was listening to the opinion of a friend or a coworker, and then I would hear a different opinion from the news anchor on the financial news networks, and then ultimately it would just mess with me. So there's a kind of like a popular saying in martial arts that I think is also applicable to trading, and that is, it's better to have one technique that you can fight with than having 100 different techniques that fight with you. So essentially what I'm saying is, just have one defined strategy or method that really helps you in trading, and not have all these different indicators, all these different methods, all these Elliott waves and RSI indicators, MACD, EMAs, SMAs. I mean, it can make you go crazy, like me. But now I'm not crazy, I'm quite normal. So, the next thing to be aware of is revenge trading. This is very important. Don't ever get into a mindset where you're seeking revenge against the market, or really seeking revenge against anything in life. So in this scenario, let's say you lost a bunch of money, which you shouldn't. If you keep listening to me, you will, you'll lose money, but not that much. Just keep listening to this video and click the subscribe button. But yeah, let's say you did have a particularly bad day in trading. You lost maybe 5 or 10% of your account. You made some mistakes, and now you're crying and you're depressed. And now you're thinking to yourself, "Oh man, the only way I can get over this is if I just jump into the market and win back all my money and then some, and then I can really beat the market." But that's not how it works. That's right now what I described. That's a mindset where you're in revenge mode. You're seeking revenge against the market, which is not even like a real thing. It's just the market is the market. It's not a thing that you can take revenge on. It's it's the market. So don't ever fall into a mindset where you're seeking revenge against a collective of different individuals, different hedge funds, different investors, different traders, like different factors that are just outside of your control. Don't ever do it, seriously. And another key thing, and this is just one of many things, is overconfidence. So this is kind of a bit different from like over trading or seeking revenge. You might think, oh, it's actually very good to be confident, right, when it comes to trading or any aspect of life. But actually, no, it's not good to be overconfident, especially in trading, because what that will lead to is you thinking that you're invincible, which has happened to me. There was a point in time where I had 10 winning trades in a row, and I thought, oh man, I'm a genius and I can never lose. So I'm gonna, instead of risking 1-2% per trade or 5% per trade, or whatever your risk management criteria is, you decide to go all in. You're gonna risk everything. You're gonna put your life savings into a certain coin. But what happens in that scenario? Let's say you have a great winning streak and you do go all in on a trade with all of your account balance, and that trade doesn't go your way. You lose all the profits from the previous 10 trades, and you go into the negative suddenly, and then you become very upset, and you're no longer overconfident. You have zero confidence, and then you start, you just start being depressed, and you just have to start all over again, rebuild your account, and you messed up because you were too overconfident. So be aware of that. Be aware of your ego. Try not to have an ego. Don't develop an ego when you're trading, because I'm telling you from experience, that will lead you to ruin. Just try to be aware of your mental state. Try to be aware of all these concepts that I'm talking about. When you have a fear of losing, when you have analysis paralysis, when you have this feeling that you want revenge in the market, and then when you have a feeling that you're invincible. I'm very aware of these mental states that I could get into, and I try to, there are many methods that you can use to basically avoid this. And one of the methods that I use is meditation. So when I'm starting to feel certain emotions, I kind of like close my eyes, I might go for a walk. You don't have to like meditate like a monk and do this or something. You don't have to go into a cave or anything. It can just be a simple walk. Just go down the street, look at the plants, look at whatever's happening on your street, and just breathe and just be aware of what's happening inside your mind. So yeah, that's one tip for avoiding this, is just being aware of your thoughts, whether it's through meditation, whether it's through exercise, whether it's through yoga. There's many different methods you can use. And then another thing you can do, and I can probably keep talking about this for hours, is have a pre-trading routine so you don't fall into these traps of fear of losing, over trading, having overconfidence, and revenge trading. Have a routine where you analyze the markets, you write down a plan, you have a structure for your trading. Another thing you can do is learn how to, this is kind of difficult to put into your head, it comes from experience, but try to detach from the outcome. So for example, when I put on a trade, I don't care whether I win or lose, because I know, given my track record, given my experience, given my data and my history, that I have let's say 65 to 70% hit rate. So if I take 10 trades in a row, probably most likely 6 to 7 of those trades will be winners and 3 will be losers. Or if I take, a better example would be if I take 100 trades and I have a 60 to 70% hit rate, I can pretty confidently say that 60 to 70% or 60 to 70 of those trades will be winners and 30 will be losers. So some will be winners, some will be losers. You have no way of determining which trade will be a winner and which trade will be a loser. Just know your backtesting, know your strategy, and just know that it's just a matter of statistics, which we'll get into this on a much deeper scale, like I said. And I guess the last thing, or the last tip I would recommend, as this video is getting quite long, is have risk management. We talked about this in the prior video, but have a risk management protocol where you do 1 to 2% risk per trade. That is my go-to risk management strategy, but some traders are willing to risk more. Some people are willing to risk up to 5% or 10%. It's really up to you, but don't ever have a trade where you're going with half your account or 100% or going all in. Try to develop a strict risk management protocol of 1 to 2% risk per trade, and just stick to your rules once you develop a strategy. So yeah, that is the video for today. We discussed quite a few things about psychology. So we discussed the 4 biggest pitfalls, which is fear of losing, analysis paralysis, revenge trading, and having overconfidence. And now we just discussed ways to fix that. So I hope this helps, and I'll see you guys in the next video. And be sure to click the like button and subscribe to the channel. See you guys later.